What's up guys, it's Kong right here, and welcome back to another episode of TA in 10, the episode where I explain technical analysis skills within 10 minutes or less. Alright, let's not waste any more time, click the like button, click the subscribe button, and let's get started right now. Boom! Alright guys, and welcome back to another episode of TA in 10, and today's episode is going to be about moving averages, about a simple moving average strategy that works, and especially in a bull market. Alright guys, so moving averages, you can see them everywhere. There are countless and countless strategies that are out there that you have seen everybody use, talk about them, and so on and so on. And to be honest, it's kind of confusing. A lot of people talk a lot of shit, a lot of people don't know what the hell they're talking about. But here you learn one of the most simple strategies, one of the most simple ways how to deal with moving averages and how can they be a good friend of yours, because sometimes they are like giving you a lot of struggle with it and anything like that. But at the moment, I'm gonna show you a strategy that you will love. Alright guys, stay to the very end because there is where I'm gonna be giving you a little tip. So yeah, alright, let's not waste any more time. Let's take a look. I have chosen here on the 1 hourly Bitcoin chart the EMA, the exponential moving average, or a moving average exponential, as you can find it under the indicator settings. And I have chosen the length of 21. Alright, so now having the 21 length, this is the one that I feel most comfortable with, and this is the first one moving average strategy. Afterwards, in the following videos, we're gonna be doing and going over 2 moving average and 3 moving average strategies. All right, now obviously, as we are in the trend, and I like saying that a lot in my streams or like in my technical analysis and so on, a moving average is like mostly a moving support or a moving resistance. That means that you're not having a horizontal resistance, you're not having a diagonal resistance, you're having a moving resistance that is adjusting with the price. In this case, we have the support. And we're always looking, okay, our rule that we know, we buy at support and we sell at resistance. So right here, we are looking at our beautiful support, the moving average taking as support, boom. Anytime it hits it, we buy it, anytime it hits it, and so on. Now, this is quite simple and easy, but what happens whenever we see a scenario like this one right here? Like, for example, we get signals and it closes below and above and below and above and below, below, above, and so on. What do you do then? Here comes the most important rule, guys. Moving averages, they are not reliable in a range. All right, the signals inside of a range, or like the entries, the crosses on a moving average of a moving average and the price in a range, are not reliable. Okay, so here comes the tip and trick that you should really know about.
And now, a word from our sponsors.
Oh. Yo, what's up, Jimmy? How you doing, my brother? Oh, yeah. I heard that BTC hit all-time high. Yeah. Oh, yeah. Prime XBT. Yeah, I'm gonna tell them, my boys. All right. I'm gonna tell that to my boys. All right, Jimmy. Call you later, my brother. What's up guys, I just went off the call with Jimmy. Jimmy just told me to tell you about Prime XBT. Now look at Prime XBT. What a beautiful platform called Prime XBT. You can trade turbo, you can trade co-vesting, and you can do even analysis on Prime XBT. Do you see this beautiful technical analysis on Prime XBT? Since I trade on Prime XBT, it has been hitting all-time highs. Yes, exactly. You trade on Prime XBT and Bitcoin hits all-time highs. If you trade on Prime XBT, you can dress like this. Exactly, so get on Prime XBT. Trade co-vesting, trade turbo, trade the trades, and get on your account. You can trade Forex, you can trade crypto, and you can trade the British dollar. Sign up on Prime XBT. I trade Prime XBT with Prime XBT. Sign up right now. This tip and trick is that you should always be looking at the moving averages after you have seen a strong and impulsive move to the upside. So we had a strong and impulsive move to the upside, then we came here and we wicked below the moving average, we closed above, boom, we got our bounce, and then here we went into a different structure. Now let's take a look, how is it looking at the moment and currently. Currently, once again, you can see it's very easy. We got a strong bullish engulfing, the next touch was the bounce. Then we got another strong bounce, the next touch or almost touch was another bounce. And so on, you keep on going up until you see that your market is starting to range. Your market is not moving up, it's not moving down with force. So this is where you're ignoring the signals. You're like, okay, well, the price is not moving too far from the moving average at the moment. I'm just gonna be ignoring it. Now, you know exactly that at the moment, as Bitcoin just hit and broke all-time high, this moving average is going to be very, very important. Why? Once again, because it's probably at some point gonna be hitting the moving average and then bouncing from it, just the same way as we saw it all the previous times. So, since this is the bull market edition, this is all we're taking a look at. It's basically we're buying at support. We're looking at the bullish scenario of the moving average. Now, another very, very cool thing for you guys to take a look and like maybe adjust and learn a little bit more and connect the dots between the videos, all right? Here comes the tip that has been making me an insane amount of profit, okay? Listen closely. Every single time that the price is very, very far from the moving average, like right here at the moment, let us measure it real quick. Here the price is away from the moving average, is like a very high deviation of 3% away from the moving average. This means that this is most likely an irrational move. This is the same way like Bollinger Bands work and so on. Just in this case, we have our moving average and we're looking for the distance between the moving average and the lowest price. Now, the rule says that the price is mostly prone to come back to its average, and this is exactly what it did here. So as we are in a bull market, anytime you see anything dip on the second leg after the arch pattern, if you remember our beautiful videos, and then you see that there is a very, very high deviation between the moving average and the price, this is exactly where you're getting in, and this is what you're doing, and then boom, you're Gucci. And this is how catching knives is really, really fun, because then if you're catching the knife down here, you're taking profits and closing half the position back at the moving average, and you're Gucci to go. All right, guys. Thank you very much for joining, and now wasn't that a beautiful series of another TAN10 video, guys? Thank you very much for joining, and make sure to leave a like if you like this video, and obviously dislike it if you disliked it. I really appreciate every single one of you right here, and to show you more, to do more education for you guys, I am doing Twitch streams every Tuesday and Thursday, confirmed at 6 p.m. UTC. You can tune in on kongbtc.live. The links are all in the description. So guys, thank you once again, and see you on the next video. As always, Mondays and Wednesdays, 6 p.m. UTC. You know it. You know what to do. Click the subscribe button. Kong out.